Hi, thank you for watching us here at Tax Talk UK, where we talk about all things tax and other important aspects of being self-employed, running your small business. So today I am going to talk about explaining self-employed tax. The specific question was, can you explain self-employed tax? So that's what we're going to talk about today. And before I do, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as finding other information that we have available on a whole wide range of topics, all aimed at supporting you in your self-employment. If you look on our playlist and look for your individual circumstances, so whether you're a sole trader, a limited company, private landlord, for example, then in that playlist you will find all of the questions that we've answered so far that will be relevant to you. So hopefully that is some help. And back to then self-employed taxes. So sometimes you will notice that some of the topics that we talk about and the questions that we answer are very similar, but it's the same as everything. Sometimes it just takes a little while for something to sort of click in our minds, and so having things explained in a different way will just help to sort of solidify your understanding of the topic. So much as we've talked about self-employed taxes before, the specific question of can we explain how self-employed tax works, hopefully will help to solidify that information that we've talked about. So basically, when you are employed by an employer and you are paid through the PAYE scheme, you have your gross income, and then your employer pays you each pay period, whether that be a weekly or a monthly pay period. They take off the tax that you're due, the national insurance, and any pension contributions that you need to make, and then they pay you what's left. So when you get your money, all your tax, national insurance, pension has been paid, and whatever you are paid, your net pay is your disposable income to spend, pay your bills, etc. So if you are self-employed, of course, nobody is doing that for you. So it will partly depend on which trading style you are, and I'm going to focus today on sole traders and partnerships, because it will be slightly different if you are trading as a limited company, where you will be paid likely by a combination or one or the other of as an employee through the PAYE system and for dividends. But if you are a sole trader, or the same for a private landlord, then basically you will be taxed on your profits that you make. So what will happen is all of your sales through the tax year will be added up, and that will be your income, your turnover, sales. These are just different words, essentially the same thing. And then we work out the your expenses, how much you've spent, in effect, how much you've spent to make those sales. So not only your materials, your cost of sales, your purchases, but also your sort of general expenses, any overheads that you may have, your office cost, your telephone, all those sorts of things. And then we ended up with the profit that you have made through your self-employment as a sole trader. And basically that is what you are taxed on. So sometimes people ask, but I've taken this much money out of my business account, I'm a sole trader, how do I pay tax on that? Well, it's completely irrelevant if you remember from when we talked about the trading styles. If you are a sole trader, you and the business are one. If you are a limited company, you set up a separate entity. If you're a sole trader or a partnership, the business is the same as you. So whether the money is in your business account, your personal account, if you just have one account for both, it's completely irrelevant. What you will be taxed on is your profit, and that's irrelevant as to whether you've taken it out of your business account or not. So that will be what you are taxed on, and it won't make any difference whether you take it out of the business or not. So just a word on partnerships. If you are a partnership, it's similar. But what will happen is the partnership will work out the profit of the partnership, and then each of the partners will take their specified share. So if you have two partners, 50-50 share, then the partnership will do its own return, declare its profit, but the partnership doesn't pay any tax. What happens is that profit is then split in that example 50-50 between the two partners, and each of those partners will pay tax on their share of the profit on their self-assessment tax return. So hopefully that helps to understand. So just a quick overview, because we cover it in other videos, how you calculate your profit. But if you're a sole trader or a partnership, you will be paying tax on the profit that your business has made, or your share of the profit if you are a partner. Completely irrelevant how much you actually pay yourself out of the business. It's only the profit. Only the profit that will count. So, and as I mentioned before, if you are trading as a limited company or a micro entity, which is just a very small limited company, then potentially you're going to be paying corporation tax, and then you're going to be paid in a different way. So this, and when we talk about the profit, we're just talking about sole traders today. So hopefully that helps, and that makes sense. As I mentioned, please do take a moment to subscribe to our channel. Thank you very much for watching. Goodbye.